So today I want to talk about why I think debit spreads are the best investment vehicle for small accounts. So first of all, debit spreads require a very low buying power requirement. Typically between $50 and $200 you'll find contracts on certain blue chip stocks or whatever. What debit spreads allow you to do on the call side is bet that it stays at or above a certain price. For example, let's say Apple's at 130. I could buy a debit spread for 2 months betting that Apple stays at or above 130 in the next 2 months. So pretty much at the expiration date, if Apple is above $130, then I get the max gain. And if Apple is below $130, I get the max loss. And obviously, for the put side, I would be betting Apple stays below 130 for the next 2 months, which I wouldn't want to do because over time, stocks usually go up. If you want to calculate the max gain of a spread, it would be the width between the two strikes. So let's say I had an S&P spread. Let's choose SPY. Let's say I want to bet that it stays at or above 417. What I would do is I would buy the 416 call, sell the 417 call since that's deeper out of the money. I would have to pay a debit, and pretty much at expiration date, if SPY is at or above 417, my spread would be worth $1 pretty much. And if I were to buy that like a week earlier, the spread would probably be worth $50, and at expiration, it would be worth $1 if it's above 417, and if it's below 416, then that spread would literally be worth nothing at all. So I'd lose that $50. Max loss is whatever you put in. Max gain is the width of the spread. It's probably a little hard for you to understand this just by me saying it, so we're going to hop on Thinkorswim, use the on-demand feature to go back in time, and I'll actually show you the spreads working on certain time periods. I'll show you a winning trade, a losing trade, how you would execute it, and everything that you would need to know. Alright guys, so I'm on Thinkorswim right now. This is my account right here. You guys can see my net liquidity, $3,200. My options buying power, this should be a lot more. I just did a recent transfer, so we're going to wait and see how that updates. But currently I have this right here, debit spread experiment. Pretty much this is the first time that I'm doing longer term debit spreads, and I decided to do them through a bunch of different companies, and I'm going to continue to add more. But for now, let's just go into the on-demand feature and actually get started with doing some real trades in certain periods of time. Alright guys, so right now I just skipped to January 4th, 2021 at 10:27 in the morning during trading hours. So here, as you guys can see, it gives us 100K buying power, and what we're going to do here is just buy a bunch of debit spreads, and I'm just going to show you how you would do it, how you would go about doing it. So obviously, first thing, just go on SPY. Try it out on SPY first, very simple. Trade tab, spread. So typically it'll be single. What you're going to make it is vertical spread. So boom, spread vertical. And then you're going to choose your expiration date. So you could, it varies from 7 days all the way over here. Obviously, the closer the expiration, the more volume and open interest. So the more likely you are to get a fill, the more liquidity there is. But let's just do a simple calculation here and see what would happen if we had bought this debit spread here on January 11th or January 4th. So this one, at the money one, you could see that there's two strikes here, 372, 373. If I want to buy this here, it shows it right here, gives me automatically 10, confirm and send. You could see the max loss is 580 because that's how much I would put in, and the max profit is 420. So why is the max profit 420 here? Well, the width of the spread is 1, as you guys can see. So this 60 will turn into 1 at expiration. So that's it. $60 turns into $100. It's a $40 profit. And yeah, so let's just do it with one contract. But that's the basics of it. You would typically go to the at the money, but you could also buy this one right here, and I could bet that SPY stays above 369. So SPY's at 372. I could literally bet that SPY stays above 369, that line right there, for the next 7 days, and I would make the max profits 280 from 720. So it's a lot less, but that's still really good. And then obviously if I wanted to buy one that was out of the money, this one costs $31, betting it stays at or above 79. So let's go ahead and at or above 379. So if I wanted to bet that in 7 days SPY would be above that line, pretty much that would give me $710 from a $300 investment. That's insane, guys. Triples your money like that. But for our learning experience, let's go ahead and buy 10 of these. Just got to fill. And we're going to go ahead and check back at the expiration date, which is January 11th. All right, guys, so now it is January 11th, 10 minutes before market close here on this Monday, and boom, you see P&L in the open, $700, and you could see it right here. This is our short leg. This is our long leg. You could see that on the long leg we are up almost $3,000, and on the short leg we are down $2,200. Difference between that gives us $700. It's so simple. And then if you want to go about closing this trade, you're probably like, oh, how do I do it? You just click this one, hold it down. So highlight both of them, right click, create closing order, sell 10 vertical SPY right there. And you could just click confirm send, and boom. We just sold out of the trade, and boom, we collected our profit. Really, really great. Here it says it was only 320 because I guess we had gotten a bad fill. But that's all right. We still made profit. If you really want to stretch it all the way out, let's go ahead and look at the option chain for the 0 day. So you could see here that the one that we had bought, what was it? It was like freaking, it was 370. What was it? I don't even remember, dude. But regardless, you could see that all of these ones are up 1 here that were really deep in the money at expiration. Or the marks here, you see 1, this one's 1, this one's 70, 80. And these ones are very, very cheap because they're very unlikely to get there at expiration date. All right, so now you're probably thinking, that seems a little risky for only a week out. So how can we make this a foolproof strategy? Not really, nothing's foolproof, but how can we really minimize our risk and maximize our profit? Well, we can diversify and add time. That's really the main thing that you can do with these spreads, since it requires such low buying power. As you guys saw on SPY, it was like $60 we paid. We can get for a bunch of companies, and obviously there's no limit to our expiration date. The only limit we have is liquidity. So pretty much we'll go ahead and test it out for 2 months on a bunch of different companies. All right, guys, so now it is January 11th at market open, 9 in the morning, as you guys can see right there. I just reset the buying power in the position, so we have nothing, 100K buying power. And now I'm going to just scroll through all of these and start buying everything. So I'll click back once we have all of our positions. All right, guys, so I just got done making a bunch of positions here. You can see that the cash sweep and vehicle is down to 61K. And you can already see here with all these companies, I got a ton of them. SPY, Bank of America, Disney, AMD, Overstock, Microsoft, Q's, Nvidia, Google, Amazon. We are up $1,300 already. So we're already headed. Oh, we just got filled on another thing. Let me see. Okay, so that's everything. We just got filled on Nvidia, I think it was. So that's pretty good. And now we're going to check back. These all have the same expiration date. Keep that in mind. And I bought the same amount for all of these. So keep in mind, certain companies were a little more expensive, but they each are 10 debit spreads, and they each expire March 19th. So now let's skip ahead. March 19th. And then let's make it at the expiration. So we're going to go ahead and edit this. 15. All right, so we are all done loading. We can see here on the charts when we bought back in January, there's a dip here, there's a dip here, and there's a dip here. In the monitor tab, boom, you can see now we're up $26,000 here. And you can tell which ones we're up on, which ones we're down on, which ones that are getting the max loss versus max gain based on this right here. You see in the money, and these ones, anything that doesn't say it has in the money, it's out of the money. So all the ones that are in the money, we have SPY, Netflix, Bank of America, Disney, Microsoft, Dow Jones, Overstock, Facebook, Russell 2000, and Google. And then all of these ones that are out of the money, you could see they have the max loss here. But You can see here on Google we're up 11 grand because that was an expensive one. But on Amazon we're down 5 grand. That was also an expensive one. But overall we're up. We are up, and if you really want to make your odds a lot better, then you can get it for like 120 days, make it a whole quarter. And but yeah, look at that, $22,000 at expiration date. I'm gonna go ahead and liquidate all these positions here for you guys. All right, guys, I'm actually not gonna liquidate them all because that would take so long to do because I have to keep clicking them individually. But you guys can see if I were to liquidate 123 net liquidity, that's insane. So we can just reset it right now because obviously it doesn't really matter. But that's the power of it. And what you're probably thinking right now is you're cheating because the market went up in that period of time, and if it happened any other time, it might not work, and it's too risky, and this and that. I'm about to prove to you why that's wrong. So let's choose a completely random date in history. You can choose tons of different years. I'm not going to look at any chart of SPY. I'm just going to pick a number, 1 through 10, 7. Let's just, I don't know. Actually, let's not do that. Let's just pick some random month. I'm just going to click until I stop clicking. So February, and then we're just going to go. Okay, so you can't go lower than 2010. So let's just go 2016, and then we'll choose, we're already February, we'll just go 2016. I have no clue where the market was at this point in time. Absolutely no idea. February 27th and 26th. What the fuck? Alright, guys, so it's February 22nd. We're very close to expiration here. So, not expiration, sorry. Market close. But on certain securities here, like Apple, ones that had splits, it shows that they shot up like crazy here for some reason. We're just going to ignore that for now, and we're just going to go with the debit spreads that we were doing before on a bunch of different companies during this time frame. Alright, guys, so I got a bunch on basically the same companies, ones that I could find with the same expiration date. There were a bunch of orders I had that just wouldn't fill because they had no volume or open interest. But let's go ahead and skip into expiration here. So I have absolutely no clue what's going to happen here. This could easily go wrong, and I'm about to eat my words here. But May 20th, let's go. May 20th, we'll go all the way to expiration. So bow. Alright, guys, so you can see here we are up 4 grand. A lot of these are in the money. Most of them are in the money. Few are out of the money, but look, we're up $4,000 here. And you might be like, oh, that's very small because you have 100 grand. I didn't spend a lot here, but that's profit nonetheless. We made $4,000 on these just because these ones are in the money, and the ones that are out of the money, obviously you lose on them. So that's it, guys. That's basically all you do. It really is that simple. And you're probably thinking, why not just buy leaps? Leaps are a lot better. Well, let's just go ahead and choose SPY as our key example. So on the vertical spreads, I mean, if you're just going to single and you want to buy a leap here for like look at this. Well, leaps are pretty cheap back in the day on SPY, $1,000, but now you'll find leaps for like 10 grand each. And we don't have 10 grand, dude. We got 3 grand in my account. So these work really, really well. They work, and they will always work as long as people buy options. But anyway, guys, let me show you my current positions, and I'll give you guys updates on them as time passes. So right here, like I said at the start of this video, debit spread experiment. We have all these companies here. I'm thinking about adding more. I'm probably going to add some oil stocks because they do very well during, fears about interest rates and high bond yield environments, as you guys can see right here. During February, when there was a lot of talk about bond yields, these things started ripping. XOM, along with Tesla, back in February, started falling. What else? February started falling. I can give a million examples here. Promise me. Promise you. Skills. Thing got clapped. So pretty much we're going to add some value in oil stocks, bank stocks. Those do the best. We also want to have some tech exposure, but that's my plan. We're going to hold these all the way to July 16th. But obviously in real life, you can't skip ahead. So we're going to have to be patient, guys. But anyway, guys, I really hope you enjoyed this video. And clearly, this is a lot better than other videos I've made. I put a lot of effort into getting a good setup here, setting up a nice camera, setting up my mic nicely, making sure to record my screen with an actual recording software. But leave a like for the algorithm so I can get some more views. And drop a comment if you learned anything. And also subscribe because we are very close to 900 subscribers, only 40 away. Drop a sub, it's free. You can always unsubscribe later. And enjoy your day.